Hello and welcome to Moneycontrol. My name is Ashwin Mohan and you're watching Deal Central, where we get you the news and the views that matter from the world of mergers and acquisitions, private equity and equity capital market deals. Last time around, we had Jean Salata of Equity, and this time we also have a very special guest from the world of Big Four firms. Joining us today on the show is Eric Janson, the head of global private equity, real assets and sovereign investment firms at PwC. Eric, welcome to India and thanks for taking our time.
Great to be with you, Ashwin.
Right, so let's get down to it. Last year, 2023, was a rather forgettable year for the private equity community, and many would ascribe that to the spiraling interest rates. What's the sense this year that you're getting from some of your global clients, Eric, when it comes to the PE activity and interest rate dynamic? Because of the interest rate scenario last year, we saw a dip in overall private equity activity, exits, and also fundraising. So how optimistic are they as we are 3-4 months into this year?
Yes, I generally like to consider myself as a relatively optimistic person, but I've been saying that for the last several months. So it has been slow to come back, as you pointed out, and certainly, the interest rate volatility has been one of those factors. I think on the positive side, though, what's been really good to see is that in most geographies, I think folks feel reasonably confident that interest rates have peaked. So at least gives the private equity or the investor some sense of comfort that they know what that maximum interest rate will be. Whether interest rates come down over the next 3 to 6 to 12 months probably is still to be determined. But the fact that they have a sense of what that peak will be, I think gives them a little bit more optimism going into the rest of calendar 24 and into 25. So I do see that as being a nice positive, and it should lead to some nice deal momentum going into the rest of this year. I think you have to also look at the other factors like geopolitics. Also, although we've had some outbreaks of late, certainly has been some more stability there as well. So I think as those trends continue to play out, I think we actually should see some deal activity pick up, right? It's hard not to also consider how much capital is on the sideline, right, that has to be deployed, and how many portfolio companies these private equity funds hold. Like currently, I think last count I had was roughly 28,000 portfolio companies that are being held by private equity funds.
Wow.
That needs to be churned, and that money needs to be, returned to LPs. So you've got a lot of tailwinds that are behind this market, and I think with some more stable interest rates, it should actually hopefully promote some deal activity here over the next few months.
Right, you struck an optimistic chord. In fact, you spoke about dry powder. The likes of Blackstone globally have $200 billion of dry powder. And of course, many of these private equity firms, Eric, are also looking at India. India, over the last 6 to 12 months, has been seen as a global bright spot. Would you say perhaps it would be the go-to destination for the global private equity players in Asia, perhaps the most preferred destination?
I mean, there's little question in my mind that it is one of the hotspots globally, right. And in particular in Asia. I mean, there are some nice characteristics in Southeast Asia as well that I'd probably point to, but just given the sheer size, right, 1.4 billion population size, GDP growth north of 6%, there's not many countries in the world that are north of 2%. And I think I even heard recently that yours might be reforecasted up to nearly 7%. That type of growth isn't coming in many other countries of this size and with this sort of trajectory in terms of its middle class, its intent on building infrastructure. I'd mentioned to you, what you guys are doing with the train system and what you're doing with real estate and buildings. I think there's a really, really optimistic tone to be taken towards India, and the number of our clients that have actually established very significant footprints in this city and in this country, I think is testament to the belief that folks believe there's a large opportunity in India. I think you hear from many of our folks that are planning to put extra allocations towards India, and I think you've also seen things publicly out there that say the
right.
amount of deal volume in India could multiply 5 times between now and the end of this decade. And you're just not seeing that type of growth elsewhere. So I do think you're going to see, a disproportionate amount of equity starting to flow towards this area.
So most favored pick in Asia, India?
Yeah, I do think so, just given the sheer size, right? You don't have this type of population, this sort of consumer demand in this sort of real estate market in any other places at this scale.
I just want to shift focus to a bit of a global trend that has sort of taken shape over the past few years. And this is some global PEs looking at, what I would call unorthodox targets. Like, say, for example, we have seen Swedish firm Equity acquiring BPEA to sort of bolster their Asian presence. Then we've had TPG, looking at NewQuest. We've had Grant Thornton US selling a majority stake to New Mountain Capital. And recently, we've heard news reports about CVC Capital, another key private equity player, looking at EY's Italian consulting arm. Of course, in India also we have an example, but that example fructified several years back, wherein KKR picked up a stake in homegrown investment bank Avendus. The point I'm trying to get at is, do you see more such deals going ahead, wherein Ps, global Ps, take control in, say, rival Ps, or even or even advisory firms and investment banks, like I just mentioned? What seems to be the driving force behind these transactions and the investment philosophy?
Yeah, I'd probably break that into a couple of pieces. Sure. The first one you mentioned, the funds actually buying other, similar type funds or other asset classes. I think there's a strong desire, especially by some of the larger players, to get more and more assets under management, because that does allow them to provide a diversified offering to their clients, the limited partners. It also gives them some efficiencies in terms of ways they can run their business across multiple sectors. So I do think you'll continue to see private equity fund buying a credit fund because they want to be able to offer a credit product to their clients. I think you'll see them buying, could be buying a real estate fund to provide that sort of an opportunity or that sort of product to their clients. So I do think you'll continue to see that happening. I think the LPs are actually looking for, their big private capital clients to be able to provide a very diversified, well-organized and efficient investing option for them. So I think we will continue to see that on that side. With your point around the professional services firm, super interesting, right? I've got a bit of a self-interest in that. It's great to see the attention on it, because I do think that ends up making it a little bit more obvious as to what the value opportunity is. I think you can see the way some of these firms are set up. They're either geographically set up or they have certain functional expertise. It's a typical private equity play in that you can look at an opportunity to scale some of those businesses, whether it's by going and buying a bunch of geographies to create a global scaled company, or certain functional capabilities. You might have a cyber and risk consulting firm that you want to marry up with a broader consulting firm. Being able to put those together, it's hard for those things to be done inorganically, to be done organically, right. But to be able to do that inorganically is pretty efficient. So I do think private equity has shown a long track record of being able to build up companies like that from different pieces. So I do think that's going to be a pretty interesting one to see play out. They're very complicated because most of those types of businesses are partnerships, and they're partnerships individually in different geographies or different capabilities. So you've got a lot of culture issues, you've got a lot of regulatory
integration issues.
And it's very reliant on the people, right? Those are people businesses.
Not just assets.
This isn't selling a product, yes. Right? Or a monthly service. This is the people you're investing in. How do you keep all those people aligned and moving in the same direction? So super interesting area for private equity to play. They've shown they can do roll-ups and build businesses like that. But it is one that will be interesting to see play out here over the next couple of months.
Right. Let's see how the exit strategies also play out in many of these situations. Now let's shift focus to the startup ecosystem. Eric, is the so-called global funding winter in the startup ecosystem or the tech ecosystem still on? Because there was a phase wherein VCs, held back, and they were not signing deals with the same enthusiasm as they were perhaps during COVID, where you saw a lot of froth in the system. And many of their positions were taken up by the larger private equity firms, because the bigger VCs sort of took a pause. So what's your take on the current environment in the tech ecosystem? And are you seeing VCs making a return and signing fatter checks more frequently, as was the case earlier?
So I don't think we're seeing that quite yet. I don't think anyone would disagree. There was a period of time a couple of years ago where it did get almost a little bit too frothy, and I think people were chasing growth for growth's sake and not necessarily really understanding the fundamentals of the business they were investing in, or even the financial performance of the business. So I do think there is this period of taking stock on what you do have, making sure that you can actually either get out of that investment and return the dollars, or potentially have to write something off. And I think that has caused them to take a bit of a pause. I do think that again comes back, right? I mean, even geographies like India, there is so much opportunity in that growth sector that it's just a matter of time before some of that comes back. But I do think a lot of those funds and a lot of those participants are really taking stock of what they do have before they actually go in and put a lot more money to work.
And also looking at disciplined targets which are either already profitable or there's a clear path to profitability. Because that was an aspect that was hidden under the blanket, so to say, earlier. Now there seems to be a lot more focus on looking at profitability.
Yeah, absolutely. Like, folks want to know what they're investing in. I think they want to be able to tell their investors what they've invested in. And to do that, you need to understand exactly what that company does, how much money it makes, and be comfortable that there's a path towards profitability, right? There has to be a path. And I think some of us probably lost sight of that there for a short period of time just because it was so frothy, but I do think that will play a big role in this.
All right. So the winter is still, we're not completely out of the woods yet.
Yes, I have not seen that volume come back, and my sense is we still got a little bit of time before we see that come back to where it was.
Right. All right. Point noted. Now let's talk about the world of pension funds, sovereign wealth funds. That's also part of your global portfolio. You work very closely with some of them. How about their interest in India, and the competition that they have with, say, the bulge bracket global buyout funds? Many of them compete for auction processes. Do you see the sovereign and pension funds perhaps keen more to form a consortium or to combine with the global private equity funds, perhaps looking only at minority stakes? Or do you see them in India giving a strong opposition when it comes to the hottest deals in terms of control scenarios?
Yeah, it's interesting. It's an interesting part of our market, one that I'm very, very bullish on just because of the sheer amount of capital that they have to deploy. What's interesting for folks to recognize is that most of those, in fact, I think all of them, tend to be the limited partners in the private equity funds themselves. So there's this inherent partnership / conflict that they must manage. And that will be interesting to see how that plays out. Up till now, right, the vast majority of their effort in dollars is generally around actually linking in and co-investing alongside those LPs in transactions. I think that's where you'll continue to see a large amount of the dollars.
Okay.
But I do think they've all done some of the math on this, and direct investing is an area where they can actually also make some returns as well. So several of them are, building an infrastructure to be able to do their own deal sourcing, execute on their deals.
They'll also have to build the teams here,
yes,
right?
Build teams to do those deals. And some of them are, by mandate, some of them can't do majority deals. So I don't think you ever see them do majority deals. But some of them now are allowed to do majority deals as well. So I do continue to see them playing a bigger and bigger role in this ecosystem that we're in. But I think they will have to manage that dynamic between investor and partner versus competitor, because I think that will be something that comes up, because as these bigger deals come to play, there's only a certain number of people that have the equity check size to do that, and the sovereigns are, and the Canadian pension funds are in that bracket of folks that can do those sides of deals.
So more consortiums and perhaps more direct investing as well from this pocket?
Absolutely.
All right. In India, for the rest of the year, I'm sure you've taken a pulse check by now and spoken to your deals team and your private equity team over here. What are some of the top 3 sectors that you feel will stand out in terms of maximum private equity deal activity going ahead in this year?
Yeah, it's been super interesting to actually be on the ground here this week and see some of this in action. I mean, there's no doubt technology continues to be an area that's of a lot of interest. Serving the population that you have here and all the needs is going to require technology solutions. So I think that will continue to be a hot area. Okay. Health services in and around your infrastructure. I think we've seen a lot of deals in that space already. I think you continue to see roll-ups as well as transitioning those assets maybe from one buyer to another. I think that will continue to be an area of interest. Industrial services or industrial type businesses I think will be of interest. And then infrastructure. I think infrastructure is the one that I see kind of coming up as well. I mean, you can see the building around here, whether it's the rail system that you're putting in, the new tunnel system that's going in, all the roads around the country that need to be put in to move the population around. I think you're going to see more and more of that. And then I think you also have the energy transition that kind of links into infrastructure as well. So whether it's solar panel, wind farms, alternative energy sources, electric vehicles, all of those types of things, when you think about the size of the population you have in this country, are going to require significant investment dollars. And I think there's a return to be made there as well. So I think those will be, some of the hotter sectors and subsectors over the next several years.
Right. One trend that also panned out last year, and this sort of coincided with the buoyancy in the capital markets, was that they were not just block deals, but mega blockbuster, big block deals, right? And most of these block deals were led by private equity players, which had a chunky or a majority stake in some of these listed companies. So at one go, it was a cleanup trade, and there were some trades of about $800, $900 million towards the end of last year. So India witnessed a lot of private equity exits via big block deals. Is that something that has been happening globally as well? Is that something that you know, or is this just a reflection of perhaps how deep the Indian capital markets have got?
Yeah, I think it's a little bit more of an Indian phenomena, but I do think you'll see more and more of these types of transactions happening outside of India, and I'll speak specifically North America. You know, there still tends to be a valuation expectation gap in terms of what, you know, the seller or the PE fund might have an investment on their books on and what the market's willing to return to them. And I think that's causing still a bit of a pause. You know, a private equity fund does not want to sell a business below what it might be marked on their balance sheet or what they might think the right return is. So I think they're still a little bit more patient in waiting for that valuation to get to where they think it's appropriate before they actually sell. So there's a little bit more of a delay in some of the other markets, but I do think you'll see that come to play here very shortly.
You know, another trickle effect of the buoyancy in the capital markets is the fact that there are a lot more IPO candidates, a lot more than what was the case earlier. Many of these IPO candidates are also backed or promoted to a great extent by, you know, the global private equity players. What's the dynamic globally when you look at private equity players looking at exits? Are they looking at secondaries? Are they looking at classical M&A auction processes? Or is the trend now shifting to opting for the public markets where they might get a better valuation? At least that's the sense in India, because in many situations that I've noticed, you have an M&A situation and suddenly in a few months that's put on the pause, and then you suddenly find the same target becoming an IPO candidate. Is that something that you have noticed globally as well?
I mean, you guys are in some ways spoiled with the capital markets that you have in India. The IPO market in this particular country is, for the most part, unmatched right now in terms of what's going on in the rest of the world. So the IPO path here is one that is certainly high on the radar, I think, of most of our clients because of the valuations you get, because of the reliability on that market and the stability that market's been providing of late. We're not seeing nearly as much of that in North America and Europe. Those markets are starting to show some signs of recovery. There was a period 2 years ago where any sell side that was happening was a dual track between potentially selling to a strategic or a private equity fund or taking it public. You know, that has really gone away the last probably 18 to 24 months. But we're starting to see some signs of that IPO market in the U.S. in particular starting to come back. So I think that will continue to be, you know, something they'll consider, but not nearly to the extent that we're seeing in India. Your stock markets here have been, you know, a phenomenal opportunity for the retail investor and for, you know, the private equity funds relative to some of these exits. So yeah, it's one of a kind.
Of course, all eyes also on the outcome of the elections, because if the same government comes back to power, that indicates policy continuity, and that would also be taken positively by the markets. Quick take, Eric, also on the evolution of two popular mechanisms that took a while to be adopted, took a while to be embraced by the regulator, by the stakeholders and the capital markets, and that's REITs, Real Estate Investment Trusts, and InvITs, Infrastructure Investment Trusts. The likes of Singapore, of course, had taken a lead, but these products and these routes are now being increasingly adopted by investors. How do you think India has shaped up in this segment?
Very, very, very well. I think you're going to continue to see a lot of momentum in that market. You can just see it literally driving around this town, the amount of construction that's going on, the demand for commercial real estate, you know, high-grade commercial real estate. I think we'll continue to see the private capital flowing into those to invest in those types of opportunities, and then converting those into some sort of REIT where you can provide the investor some sort of return off of that. I think the appetite from the investors in India as well, both retail investors and other investors, is very, very strong. So I think you have a nice match there, which will create a really nice outcome, I think, over the next several years in this market, just because of the tailwinds that you have here.
All right. Time to wrap up the interview, Eric, but one quick question. I'm going to slip that in and hope you stick your neck out. Amongst the global top private equity funds, which of them do you see most active going ahead? I know I'm asking you to crystal ball gaze, but you would have an indication of who are most bullish on India.
I think it'll be my politically correct answer on that, and probably wouldn't want to disclose individual names. But what I found is very interesting is how if you look at the top funds, the bigger ones in terms of how much they have in assets under management, most of them have been very, very strategic about evolving the different capital classes they invest in. And they've been very thoughtful in terms of regions that they want to go into where there's extraordinary growth potential. And as you mentioned earlier, a political, I wouldn't say certainty, but at least some sort of consistency and transparency that comes from the political environment and the legal environment. And I think luckily for you, I think India has a little bit of all of that. That provides a really interesting opportunity for these investors. And these investors, the bigger ones, have all positioned themselves across multiple asset classes. And for the most part, have all positioned themselves with a pretty strong foothold in this country to take advantage of that. So I'm not sure there's one that's going to lean out of that, but I think you're going to see those top 5 or 10 players play a very, very, very prominent role here over the next several years.
Right. Eric, on that note, let me thank you once again for taking out time and speaking to Moneycontrol, and all the best to you and team PwC for the rest of the year.
Thank you, Ashwin. Great talking to you.
Pleasure. With that, it's a wrap on this edition of Deal Central. This is Ashwin Mohan signing off. Stay tuned to Moneycontrol for more news, views, and updates.